Hello, everybody. Can you hear me okay? I think they've enabled audio. Yep. Good. Not too loud, not too quiet, you guys? Cool. All right. Thank you, Chuck. I'll take cool. Well, welcome, everybody. It's Friday, and it's time for a regular feature here on fxstreet.com. We call it Fibonacci Fridays. I'm your host, Andre Knight. Hope you guys have had an awesome week trading so far. If not, let me give you a couple tips. Maybe, hopefully, we can make the next one more profitable for you. We had a few students in our pro room this week pulling out 100 pips a day. Now, the markets aren't always that generous. They don't always move that much. But when the opportunity is there, we've got the tools to seize it. Right? Opportunity, I've seen it defined. Actually, I'm doing that backward. Luck. You know, sometimes we'll say, oh, I wish I was luckier trading. Luck is defined when opportunity, for example, markets start to move, meets preparedness. Doing long-term analysis and being ready for the move. That's what we're going to look at today. A lot of systems focus just on entry signals. When do I pull the trigger? When do I pull the trigger? Have you ever stopped and asked yourself, what are you going to do after you pull the trigger? Why are you pulling the trigger? Now, what I'm going to show you today doesn't have to replace your current trading system. In fact, it plays really nicely with other trading systems. I'm going to show you how to understand the move, where it's coming from, where it's most likely heading to. Then you can zoom in on your favorite time frame, use your favorite signals and indicators, and trade within those parameters. But you got to have a clue as to what's going on. So this week was an eventful week for the Euro USD. That's why I've got this particular chart up. President Obama in the United States won himself, or bought himself, one of the two, 4 more years. Meanwhile, not to be overlooked, in Europe, also an important election. Greek Parliament and the people of Greece hotly debating the new proposed austerity measures. Right, so plenty of news, plenty of action on both sides. I like things that have a reason to move, especially if both halves of the equation have a reason to move. Strength versus weakness. That's part of what drew me to the Euro USD this week. The other part is it's the unfolding of a pattern I'm very familiar with. I like trading patterns I recognize. It starts with recognizing an opportunity or a trade idea, and then as I'll show you, the fibs help me kind of quantify and measure that idea. And then I can find the specific trades within that. All right, so what do you guys see on this chart? I'm a very hands-on person. I don't like to teach theory. I like to teach what I'm actually using in the markets. That's why we're looking at the Euro USD. I got out of a trade here literally less than an hour before this class started. So it's fresh in my mind. And it's a pattern we've been watching unfold for the past 2 weeks. Yeah, there's a harmonic pattern, Chuck. I see you've got some experience with this. Fibs, by the way, are used throughout harmonic patterns, but even more basic than that. Yeah, we definitely got that, Arvind. Absolutely right. Let me turn on my drawing tool real quick. Let's see if this by any chance rings some bells. What if let's see. There. Okay, there we go. Drawing tool. What if I do a line like that, and I do a line like that, and say another one like that, and like that, and like that. And just for fun, let me just do, this helps people a lot sometimes. No, it's not the Batman logo. Come on, anybody recognize this? Head and shoulders, folks. Head. Oh, pardon me. Head. There we go. The one with the eyeballs. And shoulders. It only looks like the Batman logo when the shoulders are bigger than the head. Okay. A lot of people recognize this pattern. We've got a head and shoulders. Great. What's it mean? What do you do when you see it? Probably nobody's told you specifically. Well, what you do, you mark the neckline, okay, and you'll notice I like to go by the bodies, not the wicks. They represent market consensus. Okay? And Wayne, you got the right idea. It's a reversal. But how far? Let's get specific. Is it okay to enter the move? How much of it is still left to go? And how do we know the reversal is really underway? Well, check this out. I mark the neckline, right, the bottom of the bodies. And now I'm simply going to connect them with a trend line. I'm sorry, that's not a perfectly straight line, but you get the idea. I'm doing this with a mouse. I'm not an artist. You extend the neckline. And what I want to see price do is I want to see it break below this neckline, the trend line that the neckline forms, and then retest it from underneath as resistance. Which it did beautifully. Orlando, welcome. Can you hear me now? And Linda, not just a double top, but a triple top. This thing's really serious about reversing. Okay, so now let's answer the question, how far? All right, the way we do that, I'm going to go off the second neckline, And this time, I'm going to draw a horizontal line. Straight across. And then, we draw another line from the top of the head. And notice this time I went to the wick, because I'm measuring distance. The highest point reached to the point of consensus on the neckline. You also see these two are closer to the same level than the two wicks are, right? You got more consensus here. There was also a prior low for these two candles back here. Oh, and a prior high back here. Look at that. 3 more prior lows. We know we're on to something. Guess what? We even retested that level from underneath as resistance when we broke it. So top of the head to the consensus point of the second neckline, straight across, and basically you roughly double that distance. That's what you do with a Head and Shoulders. Okay. Draw a trend line across the bodies of the neck. Wait for that trend line to break, retest from underneath as resistance, and then measure distance by measuring from the neckline to the tip of the head. And roughly double that distance. Exactly, Orlando. And look, we are. For the past nearly hour or so, we have been. But wait. It gets more fun, you guys. Because there's another way to predict this target. Okay, Arvind, you mentioned up, down, up. Right? Somebody mentioned ABC. Okay? Well, Fibonacci, you guys, is basically based on the premise that if you're trying to figure out how much lower this current downtrend is going to go, you can figure it out by measuring the preceding downtrend. Right? They say history teaches us a lot. So what the ABC refers to, A is where the move began. And here I'm measuring distance again, so I go wick to wick. The original move began of this zigzag. B is how far we got before we had a major retracement to the upside. Okay? And C is how far that retracement went. Okay? And basically, point D is the point we're interested in. How much further can this thing go? Because Head and Shoulders worked out well, but I just eyeballed it. You know, I put my hand on the monitor and measured the distance from my fingertip to my second knuckle. That's not very scientific, is it? Right? We want trading to be precise, not about guesswork. And basically, Fibonacci boils down to this, you guys. Measure A to B, sit back, wait for C. Once you see C, C will help you determine where D is going to go. Let me show you how that looks like with a fib. We go to point A, we click our mouse and we hold it down, and we drag down to point B and let go. And right away you should be looking at this, looking at some of the in-between levels, right? And you're going, oh, holy crap. So these market moves back and forth that I thought was just whiplash aren't actually random. No, they're not. Okay, let me explain a little bit about what you're looking at on here. Just going to move this over a little bit. That'll work. The first thing I do after I draw a fib, I look for what I call snaps, you guys. And a snap can be either a body or a wick. Remember, I have control over 2 points, A and B, where I click the mouse and where I dragged it to and let go. I don't have control over where these in-between points will fall. So if I see price, either bodies or wicks, reacting right to these levels, I know I'm on to the right fib. That tells me other market participants are watching the same level as I am. That's why the reversals are happening at them. That's why the candle closes are happening at them. You get what I'm saying? You're getting a chance to peek over your opponent's shoulders. What could be more valuable? Now, what happens if you don't get snaps the moment you let go of the fib? Well, this red dotted line reminds you of how you drew it. Double-click on it, and you'll get little white squares at each end. Now you can click and drag. You notice I have 2 other potential point Bs nearby. I have another potential point A I could try. Heck, if that doesn't work, I could even try this one further down. Trial and error until you get really good snaps. Then you know you're on to the right fib. Next thing, notice point B where I let go of my mouse, that's labeled 0 on my chart. Okay? The origin point. As I move back towards A, where my trend began, from B, where the first one ended, the numbers count up. This is the percentage of the retracement. For example, in this case, my C went a little bit past 50%. You don't go to the point you're nearest to. It's not like rounding off numbers, you guys. We go by the last point that was actually touched or crossed. And we call that our point C. In this case, 50%. And if I extend this line over here, yeah, that's roughly halfway between A and B. We can all agree on that. That's why we call it 50%. 61.8 is almost 2/3 of the way there. 38.2 is a little bit past 1/3 of the way there. How far back towards A you retraced? And remember what I said, if you know where C is, you can predict where D is going to be. And D is how much further past your origin point you've extended. That's why all the numbers are greater than 100%. A lot of people look at my fibs and they'll say, oh, you got some weird custom levels in there. No, I don't. I just flip the fib upside down and I'm showing both the Fibonacci retracement and the Fibonacci extension with one mouse click. That's all it is. It's a little time saver. And I've got an article on my forum that'll teach you exactly how to do it. How to make that modification yourself. If you're a MetaTrader user. If you're using another platform besides MetaTrader, you'll have to figure out how to get to the Fibonacci properties on your own. But once you're there, you can still make use of the values that I outline in that article. Okay, just look for the PDF attached to the first post. And you might want to read through the whole thread. There's lots of useful tips in there regarding fibs. So what are some of the rules regarding C going to D, you guys? Well, the most common ones, and the first 3 I recommend you start out looking for as you learn to trade fibs, the article will tell you about all of them. But the most common ones, you guys, the ones that occur the most often, if your C is at 38, your D will go to 138. If your C is at 50%, your D will be at 161. Not every time, but much more often than not. Enough to give you a tradable edge. And if your retracement goes to 61, your D more often than not will go to 161. So, campers, let's see who's been paying attention. What was my downside target for the Euro USD? Brilliant, Chuck, because we had a 50% retracement, we target 161. Now, Wayne, you were asking, is the candle going to 200? Perhaps. I don't know that yet. Because now that we've broken below 161.8, that's always my target. I exit, take my pips, and say thank you. Orlando, hopefully not, right, if you live in Europe? I know, I get paid in euros too. And I have to spend in dollars. So I like it when the euro goes up. I'm with you on that. But you know what? You can always make more money trading than you lose in the currency exchange. That's how you keep ahead. So what I'm looking for, Wayne, now that we've broke below our D target, below our 161.8, and now that we had a bounce and are coming back up, I'm looking to see whether this level, 27.23, my original target, if it holds underneath as resistance. Remember our check on the head and shoulders? Same thing. If this ends up being my support or my floor, we're done. We're going to have a prolonged retracement up. But if I overshoot it, generally I'll have a shorter retracement up, and then we decide floor or ceiling. If it's my ceiling, then we go on to what I call the bonus rounds. And anything beyond your D target, we just go one Fibonacci level at a time. So if 161 holds as resistance, I trade down to 200. And then I wait to see if this is my floor or ceiling. If this breaks and fails to hold as support, I wait for a retest from underneath as resistance. If I get it, and if it holds, I trade down to the 261. In other words, I'm not attempting to predict the future. There's no trading system in the world that'll do that for you. What I'm doing is I'm setting up conditional tests and letting the market show me what to do next. And I just respond accordingly, one chunk at a time, and each one leads me to the next. Yeah, Arvind, gift trades. That's why I call them bonus rounds. You getting it? Now, was there any way to predict overshooting this 161? Well, the cool thing is, you guys, fibs are time frame independent. What do I mean by that? Well, let me show you the weekly chart just for a moment. Let me zoom out to that, and let me draw a fib on the last uptrend, which, by the way, as you can see, obeyed the Fibonacci levels perfectly, even when it started to range. Back in early September, look, it's ranging between two of our Fibonacci levels. And you know what? We formed a double top. We started back down, right? This is the whole 3-week-long down retracement that we've been in the middle of. Let me zoom back in on my daily chart. You're going to love this. Boom. Guess where we bounced up today? I mean, almost exactly to the pip, the weekly 161. Isn't that neat? Because we are now at the end of the week, usually price starts to consolidate, right, as the week draws to a close. So guess what I expect it'll do, you guys? I suspect it'll bounce up and down and settle somewhere here between the weekly and the daily 161s. You see, the end of the week very often to me is like the last page or two of a good mystery novel. You know what I'm talking about? That feeling you get to the end, you're like, ah, that's who did it. Oh, so that's how it ends. That makes perfect sense. Everything came full circle, right? If the book's well written. Well, with the markets, it's actually not that different. You just didn't know exactly what to look for before. Guys, it gets even spookier. Check this out. And by the way, notice, the one time we stalled in this downtrend, we were also bouncing, not randomly, but between two fib levels. Do you guys know what this long candle is here? The one that's longer than just about everything before it or after it? Anybody know what this is? I'll give you a hint. Remember, this is a daily chart. Count the daily candles and figure out what day this was. Non-farm payrolls, Wayne. Yep, you know this stuff. Yeah, this was the reaction to the non-farm payrolls. Guess what, you guys? I'm still trading it. So many people rush to jump in the first 60 seconds. I mean, are you nuts? Do you enjoy pain? I call myself a news trader. I listen to the non-farm payrolls. I generally jump in Friday afternoon, 45 minutes to an hour later. I skip all that bouncing up and down, and I wait for the next trend to emerge. Because I know from experience that trend is going to last to the end of the day. Double Fibonacci. This is what we call a confluence, by the way. Two different fibs from two different time frames lining up in the same place. Right? So that was Friday's move that continued the whole rest of the afternoon for 3 hours nonstop. And then this is this week. Guess what? We retested the double Fibonacci level as resistance. Once the markets were convinced it held, which took 3 days, boom, down we go to the logical conclusion of the move, or the 161.8 fib. But guys, non-farm payroll, supposedly pure chaos, right? Raw emotion. There's no way to trade it reliably. Okay, let's take a look. I'm going to mark this candle with a vertical line. I'm going to go down to my 5-minute chart, right? We're drawing fibs on extremely long-term time frames, daily and weekly. I haven't moved my Fibonacci levels, you guys. This is a 5-minute scalper's chart. Look at where our bounces are happening on this range. I mean, this is to the pip. From fibs I drew on the daily and weekly chart. But let's go find that non-farm payroll. Supposedly random, untradeable, unpredictable event. Bear with me. It takes a while to scroll back a week on 5-minute candles. Ah, there we are. There's that vertical line, the pay marker. Here's the non-farm payroll. Okay, first thing I do is I figure out what the markets are doing before the report comes out. Okay, we're kind of in an upward sloping channel. Cool. News comes out. Are we still within that channel, or do we have a new pattern emerging? Guess what? We got a new pattern emerging. By about here is where people can't stand it anymore. They're like, this thing's dropping, I want to be part of this short. And then it goes up and they close for a loss. And then it comes down, and they go, damn it, I'm not missing this move again, and they short right here. And it comes up and impales them again. That's how most news traders trade. Let me show you what I do. Notice the pattern? Zigzag. Stand in the back of the room, look at your chart, and squint your eyes for a moment. Zigzag. When I see a zigzag, I reach for a fib. But guys, look at what time it is. This is well past the non-farm payrolls, almost 2 hours past the non-farm payrolls. All right, so we draw our fib, boom, we check for snaps to make sure the markets are aware of our snaps. We have a retracement that goes to 50%. Drum roll, please. Ta-da. 161. If that breaks retest, you go for the bonus rounds. This is on a frickin' news trade. Actually, hold on a minute. That was European news earlier in the day. This is the non-farm payroll. Sorry, this was a week ago. I got to refresh myself. Yeah, this is the non-farm payroll. All right, same pattern. Notice I'm not going from the top of the trend. I'm going from when the news was read. Yeah, this is more precise. This is how I remember it. 50% retracement, right? Remember, it's by what you touched or crossed, not what you're closest to. So in this case, they both give you the same target anyway. But 50% retracement, right? That was the last fib completed. Boom! 161. And look at that precision. Okay, so you overshot by a couple pips. This is non-farm payroll. Right? 32 pips in less than that many minutes. But you did it safely without all the danger that people usually encounter here. Oh, and here come the bonus rounds. Okay, you definitely would have wanted to get out of here, because look, then for about 2.5 hours it moved against you. Once you start breaking support, retesting as resistance, that's how you get into it. 161 to 200, and back and again. Wait till you break below that as a floor, then boom. Where is it? There's the 261 from that fib. The reason we ranged a little on the way down is this is my longer term fib. That one I drew from the daily chart. And isn't that interesting how precisely price is reacting to it, even on a 5-minute chart? So guys, don't take my word for it. Take your favorite pairs, take your favorite time frames, look for zigzags. I recommend you do top down. Start with the higher time frames. Every Monday morning, look at your weekly chart. Every day when you start your trading day, review your daily chart. And keep working your way down. When you see a zigzag, draw it. And keep work. When you don't. You don't have to draw one on every time frame. In fact, it gets cluttered if you do. Just where you see a clean zigzag. And then zoom on in to your favorite time frame. Apply your favorite indicator and syndicate signals and indicators. Pardon me. It's been a long night trading. And look how it lines up. See where the snaps are. And I promise you, you add this to your repertoire, instead of hacking away for 10, 15 pips at a time, you're going to be catching moves more like my pro members do. 50, 80, 100 or more pips per trade. Over and over and over again. Because the market tends to zigzag quite a lot. Usually it scares people. But sometimes you run across people who know what to do with it. All right, you guys, I've given you as many ideas as I could in our short time together. Obviously, I can't teach you everything there is to trading in one session, but hopefully I gave you a good starting point. If you'd like to go further, here's a few takeoff points. All right, here's my Twitter, my Facebook, YouTube channel. All right, and if you want to learn the entire system, what I did is I recorded a series of workshops. It's about 5 hours worth. You can probably do it all in the upcoming weekend and be ready and fit for Monday. So I do recommend watching them several times. There's basically a part 1 and a part 2. Part 1 is the technical stuff, how to read a chart, all of my indicators, how I confirm Fibonacci signals, how I time out my entries, everything. The second part goes into topics usually not covered very often. Trading psychology, money management, understanding risk-reward concepts, and using them to your advantage like a casino does. See, casino gambling seems random. It's not random. It's stacked pretty mathematically accurately in the casino's favor. Everybody thinks in trading the brokers are the casinos, but you can learn how to stack the odds in your favor. Okay, you may have heard of our Pro Room. If you haven't, just visit fxnight.com, click on Pro, it'll tell you all about it. Okay, but maybe you're not ready to make a monthly commitment. We teach classes twice a day, start and end of every trading session. We set up trades, applying our rules. First of all, we give you access to a video library to teach you the rules. Then we set up the trades in the mornings and follow up in the afternoons to see what worked and what didn't and what we can tweak for the following day. Okay? But you might not have the time for that. I understand. At least get the recorded workshop, learn the rest of the system. Or if budget's your problem, here's a sweet deal you can't refuse. We did this in response to people's suggestions. Maybe you don't want to sit in class live. Maybe you just need an overview or a few good trading ideas for the week ahead. So for only 29 pounds, which is nothing. I mean, nothing. Most people lose more than that on a single trade. Right? We'll send you our Monday morning recordings so you can watch them and follow the same scenarios our Pro members are. The only difference is the Pro members get a live room, so they can continue to follow the trades as they unfold throughout the week. But if you're just looking for trade ideas, or you want to get a feel for the room before you join full time, check us out for only 29 pounds. And you'll get the Monday morning weekly updates mailed to your inbox. So whatever, just give it a shot. And I'm not here to sell you something, you guys. I just want to give you some pointers if you like what you're hearing and you want to go further. Okay, at the very minimum, visit fxnight.com and please sign up on our mailing list. So the next time we have one of these free webinars, we can send you an invitation. Alrighty, you guys, and with that, I want to wish you a wonderful weekend. And hopefully lots of pips come the following week. I'll see you guys next time. Cheers.